The dollar very strong, making new year-to-date highs today. Obviously, that is having an adverse effect on other currencies. And since those September highs, we pushed down lower. Momentum really starting to gain to the downside in the euro currency. We broke through that 114. I think that was sort of a substantial level to get through. We're targeting 113, which would be the year-to-date low. And right now, it's more of a dollar strength trade. Yes, there is some weakness in the euro when you talk about growth, when you talk about inflation, and how the ECB is going to handle things later on. We'll talk about that. But ultimately, from a technical perspective, we are still very bearish here. And if 113 doesn't hold, look out. That means it's a whole new ball game to the downside. So right now, we are still above that. But 113 is the target ultimately, at least by year end, as we continue to watch the euro currency decline. And if you look at what the ECB has done, it's got its hands full as well. Not only do we have issues with what's happening with Brexit, not only do we have issues what's happening with Italy and other countries, but now you got data, slower growth. What if slower growth comes in and they can't pull back the reins as much as they want to? They've already talked about taking away the bond buying program, and now they're looking to raise rates sometime in the second half of 2019. But if you don't have growth, you do have high inflation. But if you don't have the growth, it could be a conundrum for them because they don't want inflation to continue to go higher. Today, Germany saw their highest inflation in a long, long time, and they don't want to have high inflation and low growth. Obviously, that's not a good combination, and certainly puts a central bank's toolbox that it uses on the sidelines because right now it becomes one of those: do you focus on the growth or the inflation? And right now you can't do both. And with zero interest rate policy, you really don't have a whole lot of choice as far as easing goes. So you can only go back to bond buying, and that's not something they want to do. So obviously that also weighing on the euro currency. And last, let's look at that Brexit. No Brexit deal, which odds are going up. And if you look at the euro pound cross, or the pound euro cross as we'll look at it, it's near a critical level here. Since 2017, the high and low were near the 50% range at 112. That would be significant if we got through it. Obviously, we've been trending lower with the pound suffering the most as they have the most to lose, it seems, in a no Brexit deal. Brexit will still go through, but whether or not you get those trade negotiations, you get those regulatory oversight combinations, whatever you want to call it, Ireland, there's a lot of things that could go wrong here, and Brexit would be the one that bears the brunt in the short term. No one really knows how it will look in the long term, but certainly the ugliness of what we've seen between the ECB or between the European Union and the UK since the negotiations started might scare away any other potential EU exiters. Talking more about probably Italy as the whisper talk, but nothing substantial has come through. But that would probably be something that if you can't get a deal between these two over 2 years, what does anyone else have a chance? That's probably a smaller economy. So right now, the euro currency itself versus the dollar is seeing lower trade against the pound, actually seeing a higher trade. But everything is relative, and I think right now the weakness in the euro currency is more a matter of what's happening with growth there. Likewise, with the strength of the dollar and what we're seeing here, the two together are pushing it down to near lows. Not at that 113 level yet, but that is our target. This is Todd Colvin coming to you from the floor of the CB Group.